right now, while you sleep, while you work, while you scroll through your phone. Your money is shrinking, not because of bad investments, not because you spent too much last month, not because you made any obvious mistake, but because of something most people never even hear about. Something that has been happening quietly in the background your entire adult life. A hidden tax. Silent, legal, and completely by design. By the end of this video, you will understand exactly what is happening to your money, why it is happening, and the 3 moves you can make starting this week to protect yourself. Stay with me. This is important. Let us talk about inflation. Now, before your eyes glaze over, stay with me. Because this is not the boring economics lesson you sat through in school. This is not theory. This is not abstract. This is about your actual life, your actual money, and the actual gap that is quietly growing between where you are and where you want to be. So what is inflation exactly? Inflation is the rate at which the prices of goods and services rise over time. When inflation goes up, every pound and every dollar you hold buys less than it did before. Not a little less, significantly less. Here is the number that should shock you. If you had saved £10,000 or $10,000 10 years ago and simply left it in a standard savings account, earning almost nothing in interest, that money today would have the purchasing power of roughly £7,500 or dollars. You lost £2,500 without spending a single penny, without making a single bad decision, just by leaving your money sitting in the place most people consider safe. That is the hidden tax. You did not get a letter. There was no bill. Nothing left your account. Your balance might have even gone up slightly, but your real wealth went down. And here is the part that makes it worse. This was not an accident. Governments and central banks around the world actively manage inflation as part of economic policy. A small amount of inflation, around 2% per year, is actually their official target. That means the people in charge of the financial system have decided that your money should lose value every single year. By design. And your standard savings account? It almost never keeps up. Most people were taught the same thing growing up. Work hard, save money, put it in the bank, be responsible. For generations, that was solid advice, and it is not wrong exactly. The problem is that the world has changed, and the advice has not kept up. Decades ago, savings accounts in the UK and the United States paid 5, 6, even 7% interest. Your money actually grew sitting in the bank. Keeping up with inflation was not even a concern for most people. Today, it is a completely different story. In the UK right now, the average easy access savings account pays somewhere between 2 and 4% interest, depending on where you bank and which product you use. In the United States, the average traditional bank savings account pays well under 1%. Some of the biggest banks in America pay as little as 0.01%. That is not a typo. 0.01. Meanwhile, the real cost of living, including food, housing, transport, energy, and everyday essentials, has been rising far faster than those numbers in recent years. So, even if your bank statement says your balance went up slightly this year, your actual purchasing power, your real wealth, went down. This is not an accident. Banks make money by taking your deposits and lending them out at much higher interest rates. A mortgage might charge 5 or 6%. A personal loan might charge 10, 15, even 20%. The bank borrows your money cheaply and lends it expensively. They have very little financial incentive to pay you more on your savings. And the government? They are not going to send you a letter warning you that your savings account is losing you money. They have their own priorities. That responsibility falls entirely on you. Now here is the part of this that nobody really talks about. Inflation does not hurt everyone equally, not even close. People who hold cash lose. People who hold assets win. When inflation rises, the value of real assets like property, stocks, commodities, and businesses tends to rise with it. In fact, in many cases, asset values rise faster than inflation. So wealthy people, people who own significant assets, actually benefit from inflation. Their property becomes more valuable. Their stock portfolios expand. Their net worth grows even while they sleep. Meanwhile, the person with £10,000 or dollars sitting in a low-interest savings account watches their real wealth quietly disappear, month after month, year after year, with absolutely nothing on their bank statement to show them it is happening. This is one of the core reasons the wealth gap between rich and poor keeps growing. It is not just about income. It is not just about who earns more. It is about what you own versus what you hold in cash. It is a structural advantage built into the system for people who already have assets, and a structural disadvantage for everyone else. The rich own things that go up in value. Most people own cash that goes down in value. So what can you actually do about it? Here are 3 moves that anyone can start with, regardless of income level. Move 1. Stop letting excess cash sit idle. Your emergency savings are important. Keep them. 3 to 6 months of living expenses in an accessible account is genuinely good financial practice, but anything beyond that should not be sitting in a standard account doing nothing. Look at high-yield savings accounts which are available through many online banks in both the UK and the US. Look at money market accounts. In the UK, premium bonds through National Savings and Investments offer a government-backed option that at least gives your money a fighting chance. These options are still low risk, but they try to compete with inflation rather than simply surrender to it. Move 2. Start buying assets, not just saving money. This is the move that actually changes your financial trajectory over time. Even small amounts invested consistently in index funds, exchange-traded funds, or real estate investment trusts can outpace inflation significantly over a 10, 15, or 20-year period. You do not need thousands to start. Investment platforms in both the UK and the US now allow you to begin with as little as £1 or $1 per month. The barrier to entry has never been lower. The only thing standing between you and starting is the decision to start. And time is the most powerful factor in building wealth. Every month you delay costs you more than you realize. Move 3. Educate yourself before anyone else does it for you. The system is not built to explain itself to you. Your bank will not send you an email saying their savings rate is quietly costing you purchasing power. The government is not going to mail you a personal finance guide. Your employer is not going to sit you down and explain how inflation affects your long-term wealth. That responsibility is yours. And the good news is, you are already doing it. You are here. You are watching. You are paying attention. And that puts you ahead of the vast majority of people who will never see this information at all. Inflation is not going away. It is part of the system. It has been happening your entire life, and it will continue long after this video ends. But now you understand how it works. You understand what it is doing to your money. And you know the first 3 moves to start protecting yourself. The people who build real wealth are not necessarily smarter than you or luckier than you. They just know things that most people were never taught. And that gap in knowledge is exactly what this channel exists to close. If this video opened your eyes, please hit the subscribe button right now. Every single week I break down the money truths that schools never taught, and banks hope you never find out. And drop a comment below. Tell me, did you know about this hidden tax before today? I read every single comment, and I want to know where you are starting from. I will see you in the next video.